I have a very interesting topic I'd like to cover with you today. It is going to be something that I think adds some tremendous value to your ability to pick accurate turning points in the market. And I think this topic is going to be really apropos, meaning that it's going to be very well timed for what we're going through in current markets today. The ability to determine after an extended move in one direction or another when the market or an individual item is likely, has higher odds of turning, is one of the crowning jewels of masterful market play. Now, everything is not the crowning jewel of master market play or masterful market play, but there are certain things that really form the cornerstone of just the highest level of trading. And your ability to find moments that present a higher probability than others that a turn in the market is not a fake out, but is a real turn, is one of those crowning jewels, is one of those cornerstones of masterful marketplace. So I'm going to cover a concept today, the time and space concept. We're going to cover this concept to help you improve your ability to pick major turning points in the market. Please like this presentation. Your comments are always welcome. If you have not subscribed to the channel, please do click the bell in the upper right hand corner, turn all notifications on, because this is a place where you do not want to miss one single piece of content. We spend a great deal of time every single day making sure that something gets out to you that takes you one step closer to that ultimate goal of sophisticated and professional market play. If you start from a point like this, there is no time and space at this point, right? They both don't exist. However, if I move one step to the right, I create space between point 1 and point 2. But it has also required time. So the very creation of space has also simultaneously created time. And to a certain extent, that means time and space really don't have difference whatsoever. Now, let me go a little bit deeper into this concept before we go to charts, all right? In the market, what exactly equates to space? Well, we have two axes, I think that's the word, in the market, right? There is the price axis, and it runs the gamut up and down. That axis is what I consider to be space. Up and down is space. Time is the horizontal axis, okay? So we have the time axis here, and we have the space axis here. When you create space, you're also creating time. So if I go to 20 from here, I have created time and space at the same time. I've created time by going to the 2, and I've created space by going to the 20. It has taken me time to get to the 20, which equals the 2, the integer 2. All right. Same thing here would be, in order to get to create more space, I'm also creating time. It is possible for something to create space faster than it's creating time. What I've demonstrated here is I've demonstrated the scenario where time to create space, I've also created the equal amount of time. So my time axis is equal to my space axis. Time and space are equal. This is the equal form. It is possible to create space faster than you're creating time, and vice versa. It is possible to create more time than you're creating space. So they're not always equal. And I'm going to go to charts to show you this. But here's the main point before we go to charts. It is when they are equal that we find the most powerful turning points in a stock. It is when a stock has produced price, space, and time to produce that space in equal proportion, more or less, that a turn is more likely. It is when they are not equal that an attempt to turn is usually false. So let me demonstrate this really fast for you, okay? A stock opens for the day here. Let's say we're assuming a 2-minute time frame chart, all right? It drops from the opening price, it just drops really fast. That means it's creating space. Let's say it started at 40, down here it's at 38. It created space. Remember, time is space. It created space faster than it created time. So if I take the space axis, which is here, 40 to 38, that axis is taller than my time axis. So my time axis, if I were to put these side by side, there would be one axis that's really short compared to another axis. So my space is longer than my time, which means that if my stock attempts to bounce from here, it will likely be a failed bounce because it's bouncing from a non-equal state regarding space and time. So this attempt to move up is a failed attempt most of the time, not all the time. Nothing can be all the time in life, okay? Most of the time. This rally from a drop that has the space long but the time short will usually create a failed scenario. Now let's take the same space drop from 40 to 38. We're going to create the same space. And yet, what we're going to do, though, is that space is going to be accomplished with time. And so now we've got the same drop in space, but the time is starting to become equal to the space. And so any attempt here to move up is more likely to be real because my time axis and my space, they don't have to be perfectly equal, but they're more equal. If you only freaking knew how powerful this is. There are so many traders that get trapped into these fake moves to the upside, not knowing which moves to the upside have a higher propensity to fail versus those that should be looked at. That's a real freaking move to the upside. And it all depends on time and space, this concept that I'm covering with you. When those two axes, space and time, are relatively equal, I don't want you to start being freaking anal about everything where you have a ruler. Oliver, let me measure this. This is like 2 centimeters off. It's not quite as equal. No, we're not that specific. It's just generally there's no wide, dilapidated difference, you understand? Where one looks so little and the other looks so big, that's not going to work. And that's where you get the fake moves that capture or trap a lot of traders that do not understand this concept. All right, so let's go back to it again. So remember, this kind of drop, the beginning, end, did not, the space and the time are too off. So now, boom, that move up is going to be fake most of the time. Versus this move up is likely to be more real. Boom. Now, let's take this version of space and time being relatively close to the same size, okay? Let's take a scenario where the drop is sharp. So here's the drop is sharp, and here the drop is more gradual, right? Well, there's a way to get space and time equal with a sharp drop as well. Let's go over that. So you can have this scenario where you drop hard, you have this fake out rally, boom, fails, but this next move down gets you the time. So here's your time axis, here's your space axis, and your time axis. But this move up was the fake one you don't believe because the time was too short. But this one is the one you trust because time has grown to be relatively equal to the space. And so you can get this time by a more gradual move down or a sharp move that bounces around long enough to give you the time necessary to grow the time necessary to be relatively equal to space. I need you to tell me if you understand the theory, you understand the thesis, you understand the foundational block. You understand this so far? Good? Sound good? Do you get it? Are you picking up what I'm laying down? We're going to go to charts now. I want you to understand that this drop created time and space. And as you can see from here to there, time and space are relatively equal. Relatively equal. And there was a play to be had here. Boom. And there's your two-part play. I'm always going after that. 1, 2, 3. 1, 2, 3. 1, 2, 3. 1, 2, 3. If I'm playing to the downside, traders, I'm looking for this. 1, 2, 3. Look. 1, 2, 3. All right. On the upside, we're looking for 1, 2, 3. You understand? From the upside, 1, 2, 3. From the downside, 1, 2, 3. If you're not going for that, then you don't know what you're doing. Space. This is your space part. And then here's your time. So look at the attempt here is not the 1. The attempt here is not the 1. The attempt here, your time and your space are relatively even. So you can get something a little more thorough from here. All right. So trying a color change, boom, red takes out this, green takes out this red bar. I'm going to try this color change down here because I have enough time. In addition to that, another concept of space is that my stock has space between the stock. There's space between the stock and the 20, and there's space between the 20 and the 200 period moving average. We call that dual space. And when I've got dual space up and down with time and space being equal, more or less, I've got all three things in my favor. I've got space, I've got time, and I've got the dual space concept between stock, like the 3-finger spread, stock 20 and 200 wide apart, all coming together at the same time, producing a perfect little box. Boom, the odds of a turn from that perfect box is higher than normal. Is it perfect? No, nothing's perfect. Does it 100%? No, nothing's 100%. The majority of time, yes. Higher probability, yes. Now, there's something else here. This play was a really powerful play because the spaces, the times were equal. So if we go here and we do this time, and then we do this time. Well, this time is a little bit longer, I have to admit. But that turn, we had a move up, all right? This turn here is wide enough from this turn for me to have enough time to go again. Now that's a different tactic. What I mean is that, guys, look, a bottom here and a bottom real fast doesn't usually work. You see the two closed bottoms? When the bottoms are separated by time enough, they have greater odds. So my bottom here and my bottom there are separated by enough time, there's that concept again, to go. Now, what's cool is that I also have the space. The 20 is still far. The 20 is still far from, the 200 is still far from my. If this were to happen here, it's a different story. But this whole amount of space is like open air for the stock to flow to the upside. So if I'm taking this green bar play here because of this time and space between the two lows and this space to move back up to the next resistance, the 200 is my next resistance. I've got space to move back there. And I've had time enough between the two lows to make this attempt real. You see how there's so many ways to look at or to incorporate time and space into your trading analysis. I teach traders that when a stock produces too much space between its closest key moving average, it's time for a rest. So here's the stock moving, creating space between the stock and the 20, and we come back, creating space between the stock and the 20, and we come back, and then creating space this way, backwards, between the stock and the 20, and we come back. Now creating space again between the stock and the 20, and we come back. The market doesn't like to produce wide space without narrowing it again. Take a look. We have no space between the 20 and the stock. We produce space away from it, and then we move back to it, only to move away to create space again from it. And you either move to it or move through it, and maybe you start producing space on the other side. There's a lot of space concepts that I teach my traders. But the one I'm focused on more today is when time and space do become equal. Let's take a look at this. Here you have a move to the downside. So we create the space this way. But here, the time, if I count it from here to there, the space is a bit longer than the time. Now, this move from here was still fairly decent, but the one that really counted for me was this one. That turn and that 20 MA catch right there was my key. My traders know I love the 20 MA catch, which is you come from under the 20 period moving average, you get above, and then the 20 catches it. And I'm like, okay, now we're off to the races. If my 20 MA catches it, you see how kind of like this didn't really catch it, it kind of broke through. It still worked in a way, but this one, because of the full outright time being mature enough, this 20 MA catch was the real one. That was the big play. Now, guys, there's one way to think about this. It's that time heals all wounds, right? If you were to have a bad experience in your life, a bad breakup, a bad relationship, a painful one, it's painful in the beginning. You break up, or a bad scenario, or a bad incident, that memory is sharp, it's painful in the beginning. But over time, you are moving yourself further and further away from a time perspective, away from the event, the painful event that occurred, an accident or a broken relationship. And the more time you place between that incident and where you are from a time perspective, the less sting that the pain has. It's not as acute. And the more time, the more separation. So if we were to demonstrate this, here's the pain. And if you try to rebound too quickly, you haven't enough time to be healed from that pain yet. And this will likely fail. But if you were to drift this way, away from the original pain, The further you get away from that pain, the more you put that painful incident in distant memory, and the less painful it is. And now your attempt to rebound is free from the painful event. Let me go back to this and draw this for you. So here is the painful event. Boom. And if you try to rebound too quickly here, you haven't experienced enough time to heal from that pain. The stock hasn't healed from that pain. So this drop is likely to fail. The pain is still relevant. But if you were to drift away from that pain, now the pain is way over here. You've had time to distance, the stock has had time to distance itself from that painful occurrence, that sharp, violent drop. It has mended itself through time, and now this attempt can be considered more real. It is unfettered by the initial pain that the stock experienced or the item experienced. So here's your initial pain. This attempt is likely to fail. But with enough time, now the attempt here has more likelihood of being real because of the separation of where the pain started from. Here's the start of your pain. And the pain is likely less acute here. So there's this level of acuteness that gets less and less along the way here. Further away from pain, the attempt to move up, the greater the odds that the move up is real and not a fake out. Do you understand? So it's this bottom that turned out to be the real one. That's the one that took it all the way back to eliminate the pain. It went past the pain. It wasn't this one that went past it because it attempted too close to the origin of the pain. This is too close. I'll do that. I know I'm drawing sloppily here, but this is too close to the origin of the pain. It's not enough healing yet. But here, yes. Another thing you have to look at is that we've got time here. This attempt to move up from here, this attempt is happening with time from the origin, right? So we got time, but we also have space. Now look at the space between your 200 and your 20. So if I were to eliminate the prices here, you would see like a nice little cup, right? So imagine the prices aren't here. You'd see the 20 separate itself from the 200, get nice and wide, and start to cup up, right? And then come right back. Well, your best turning points are after this gets wide. You understand? So that's wide. And that turning point having time and space, remember, it's not always equal, but as long as, guys, I would rather my timeline longer than my space line, than my space line longer than my timeline. So if this time is a little bit longer than space, but that's not a bad thing. Because remember, time heals all wounds. The more time you have, the more healing. So if I'm going to err on one of them not being equal, I'd rather time be the longer one than space be the longer one. All right? And so remember I told you my traders love a 20 MA halt. Here's the 20 MA halt. Here's another 20 MA halt. And boom, we're off to the races. And notice the concept of space, even just on micro moves. We get spacey from here to there. It's time to come back in. We get spacey from here to there. It's time to come back in. We get spacey from here to there. It's time to move back up. So, this concept of space and time is so valuable in a variety of ways for timing turns in the market. I want you to look at Tesla's turn here. I want you to look at Tesla's gap to the downside. All right. Now, look at the time from the opening bar here. Look at the time. Now, look at the space from yesterday's close. So, here, this attempt, the time is too short, right, for the space. All right, give me a second here. They can go by, it's fine. The time is too short, guys, for the space. Do you follow what I'm saying? And so our time, this move up is likely not to be real. You see? Boom. But the more time, the better. Now, notice the length of time now. It's longer than space. But remember, if you're going to have one longer, it's better to have the time line longer than space than the other way around. And so now your attempts now, look at the 20 MA catch. That's huge. That's huge. Do you understand how valuable this is? You know how many people are thrown and knocked out of these false moves to the upside, even this one. Imagine someone thinking that the move up from here is high odds when the space, the space and time is nothing. All right, that move is likely to fail. This one's better, but it's still not enough until you get over here. Now we can start trusting. In addition, look at the space. Remember the 200 leaves, the 20 leaves the 200 and then cups. Look at the space between your moving averages now. So we've got space, we've got time, adequate time. Now we can trust the attempts to turn. The attempts to turn now are going to be robust. The attempts to turn now will have high odds of follow through. The attempts to turn from this wide space with adequate healing time can produce some massive, massive turns to the upside. You know, say, oh, wow, this is really great, Oliver. Ha, this is really awesome. You have to like the video, like. Oh, that was really cool, Oliver. And then you go about your normal everyday life and you say, yeah, that's great, Oliver. Let me like the video. Like, that's not how you make this work, right? You can't trade my knowledge or my experience. I can share my knowledge and experience with you, but that means that you have conceptual or intellectual knowledge. In order to move knowledge that first starts intellectually here, in order to move it from the intellect to the heart, requires time and experience. So you have to now, from this point, go into the real world. You have to look for time and space. You have to search for it. When you see it, capture an image for it. Drop it into a folder on your desktop. Collect the images that represent time and space. Get used to identifying them. Try a time and space concept every now and then. Play it small. Track whether it stopped out. Track whether it gained for you. All right? Study charts and look for time and space in the past. This is working with it. This is grappling with it. This is falling with it, being successful with it, failing with it. All of it matters. You then are moving the concept from being intellectual, you can't, to the heart, being experiential. You can't make money from intellectual knowledge. The same way you can't read a book on becoming a great doctor, and now you're a doctor because you read a book. The same way in trading. You can't become good just because you went to a seminar or you sat through an Oliver Velez class or you watched an Oliver Velez video or even you read an Oliver Velez book. You can't do it that way. I'm not saying those things are not important. Those are the starting places. You must start with intellectual know how. You must start with intellectual or conceptual knowledge, but it must be moved away from the intellect, and into the heart, which is the symbol of experience, right? You move it from the mind to the heart. You move it from a concept to real life know how through experience. And the last thing I will remind you of is that your success in this game and in any other game in life, your success is always on the other side of your experience. You cannot be successful before your experience. That's called luck. We're not after luck. We're not after getting it right just because of math, just because I flipped the coin long enough. I'm not interested in luck. I don't want you to be interested in luck. I'm not interested in chance. I don't want you to be interested in chance. I want what you produce to come from you. I don't even want it to come from me. And in order for it to come from you, you have to move it from being Oliver's concept to now the concept is freaking mine because I've worked with it long enough and thoroughly enough to have gained enough experience with the concept that I can put my own freaking name on it now. And that is the point where it will start to pay you. That is the point at which you deserve to get real, lasting results. This takes work, ladies and gentlemen.